Welcome to our module on the impairment and disposal of plant assets. This is just an introduction to these two concepts. Impairment of plant assets occurs if the carrying amount of an asset cannot be recovered through future use or sale. What this means is that the expected benefit of the asset is less than its current carrying value. If this happens, the asset should be written down to its fair value. The journal entry to record this transaction is to debit the impairment loss and credit accumulated depreciation. The amount of the journal entry should result in the book value or carrying value of the asset being equal to its expected future benefit or market value. We also want to look at gains and losses on the disposal of plant assets and equipment. When a plant asset is sold, any gain or loss on the disposal is computed by comparing the book value with the amount received from the sale. A sales price greater than the book value produces a gain, and a sale price below the book value produces a loss. Let's take a look at an example on the disposal of an asset at above book value. So let's assume that a machine that cost $50,000 had accumulated depreciation of $10,000, resulting in a book value of $40,000. So the book value of the machine is $40,000, and then the machine is sold for $45,000. We would calculate the gain or loss in the disposal of the machine this way. The cost of the machine less accumulated depreciation equal to book value $40,000. The cash received is $45,000. Since the cash received is greater than the book value, we have a gain on the disposal. The journal entry to record this transaction is to debit cash for the amount of cash received, debit accumulated depreciation for the total balance in the accumulated depreciation, and credit machine for the total balance in the machine account. Then we still need a credit of $5,000. That credit of $5,000 is put to gain on the disposal of plant assets. The result of this transaction is to increase cash for the amount of cash received, take the machine off our books because we no longer have the machine by zeroing out accumulated depreciation and the machine asset account, and recording the gain on the disposal of the plant asset. Next, we'll take a look at the disposal of a plant asset below book value. Here we have a machine that costs $50,000 with depreciation of $10,000, just like before, so the book value is $40,000. The machine was sold for $30,000 in cash in this example. So again, we calculate the loss on the disposal by first determining book value, which is the difference between the cost and the accumulated depreciation, comparing the book value to cash received. The book value is $40,000, the cash received is $30,000, so the cash received is less than the book value, which means we have a loss on the disposal. The journal entry to record this transaction is similar to the one we discussed before, but now instead of having a debit to cash of $45,000, we only received $30,000 in cash, so we debit cash $30,000. We still close out the accounts that represent the machinery, accumulated depreciation and machinery. We close those two out by debiting accumulated depreciation and crediting machinery, and then we debit the loss on the disposal of the plant asset account. Remember, gains work like revenues, losses work like expenses. So by debiting the loss on the disposal of the plant asset by $10,000, we're increasing the loss account, decreasing net income, and decreasing equity. That concludes our module on impairment and disposal of plant assets. This is simply an introduction to these two topics. There are many other complicated issues that you would study in more advanced accounting curriculum.